Hello and welcome back. This is Christopher Aaron. This is the iGold Advisor channel. It is August 20th, 2024, and we're going to have a gold price forecast, and specifically we're going to look at the possibility, is this a top for gold setting up soon? Now, if you want to listen to one of the thousands of channels out there that will always say the same thing, every week, every year, forever, the only thing that they will ever tell you is that gold is going higher, and that's it, then stop this video. This is not the video for you. In this channel, we take a disciplined, technical approach to the markets. And if I think the markets are going to continue going higher, I share that with you. But if I think they are going to be moving lower, I also tell that to you. So this is an independent channel where I am not afraid to speak the truth that I see in the charts. Once again, you've been warned. If you like truthful information, make sure to hit the subscribe button and the bell icon to be notified when these videos come out on YouTube. If you would like to give this a thumbs up, I appreciate it very much. It helps out here with the algorithms on YouTube. Last but not least, make sure to subscribe to our X, or Twitter as it used to be called, at iGlobalGold. You can get free updates there. Remember, sometimes I don't have a chance to post here on YouTube videos for several weeks in a row. You can find quicker updates there on X for free. Our legal disclaimer. Here we go. Now, in any given market, I want to talk about pure mathematical probabilities here. In any given market, there are three phases that a market can be in. A market can either be bottoming, which is when you want to get into a market. A market can be topping, which is when you want to exit. And a market can be in a continuation, which can go either way, of course, as we know. So if we simply look at these three major cycles, these three major parts of the macro cycle that any market can be in, clearly we can assign a 1/3 or 33.3% probability that at any given moment in time, a market's going to be forming a bottom, a top, or a continuation. Can we all agree upon this? All right, let's move forward. Let's look at gold here now from 2000 to the present. Let's rewind for a moment. Back here, August of 2015 is when I started publishing. If you don't believe me, go back and look at the archives of this YouTube channel. I have not deleted anything. The format was not exactly the same. It took me a little while to get up to speed with how to present here on YouTube, but that is when I started publishing. You don't believe me? Here's an article that I published on goldeagle.com, where I am a senior editor for the site. And I said here at the end, notice the date that this was published, November of 2015. Where was this? The very end of this green shade over here. Look at the quote at the end. Yes, the bear market from here 2011 down to here 2015, in which gold lost almost half of its value. The bear market has been long and grinding, but we are closer to the end of it than the beginning. For those who have been waiting to accumulate gold, your best opportunity looks to be arriving soon. Once again, November 8th, which is right here, right here. So notice I didn't get the exact bottom to the day, but I got it within about a month and a half. And anyone who listened to that has done extremely well here over the last 9 years, as gold has more than doubled in price. Okay, that was late 2015. Let's get rid of that. There were three primary reasons that I thought that gold was forming a bottom in late 2015. One is right here. I've circled it. It was the 50% Fibonacci retracement level of the entire move from the bottom in 2000, 2001 up to the peak here in 2011. The 50% retracement came in just below 1100, very close to the actual bottom. The second primary reason that I thought gold was going to bottom after what? A 4-year decline was this right here. Notice the peak just above $1,000 in 2008 before the global financial crisis. Notice how gold failed to get back above that peak in early 2009. And notice how when it finally broke out in late 2009, it then came back to retest that breakout point in early 2010. So this type of behavior where there's a clear horizontal resistance here just above $1,000, breakout, it then acts as support, told me on a highest probability, we've been declining for 4 years. We're coming back down to this same level that acted as support 4 years prior. It looks like this is a key technical level where once again we have a high probability that gold is going to bottom. That was the second reason. The third reason was that gold was forming this downward channel at the end of the 4-year decline, as you can see in blue. And notice that the bottom of the channel matched precisely with this horizontal resistance turned into support going all the way back from 2008. So in sum, we had 1, the Fibonacci retracement, 2, the horizontal support resistance, and 3, this downward channel, all converging within a narrow price zone. And whenever you have 3 important technical levels all converging, notice these 3 levels are independently derived. The downward channel does not have any bearing on the horizontal resistance, and the Fibonacci has no bearing on either one of those two. Anytime you have 3 independently derived technical levels all converging at the same spot, that should be sending off a major bell in your mind if you want to follow the markets and have high probability entry and exit points, because those 3 converge and you're going to have traders and investors keying on each one of those. And so that, in fact, did form the exact bottom there at that horizontal, which matched with all 3 technical points. Notice, nowhere in this discussion have I mentioned the fundamentals of the gold market. Why? Focusing only on the fundamentals, if you had said, well, here in the year 2011, they're going to continue printing money, they're going to continue with these unwinnable wars, they're going to continue bailing out banks and favorite institutions, they're going to continue debasing the currency. Yes, all those things were true. However, gold lost half of its value in 4 years, declining the entire time. So if you're only going to rely on fundamentals, eventually there will be a point where you're on the wrong side of the market because there's something that you're not looking at. So the technicals can show us what the market is actually doing. Sometimes it aligns with the fundamentals. Other times, something different is happening that's more powerful than the fundamentals that you or I may believe are the most important. This is why it's important that we align with the actual market. So, in sum, that was a high probability bottom forming there in late 2015. Can we all agree upon that? High probability bottom. I showed you the proof. That's when I started publishing. I happened to get that call right. I don't get every call right, but I got that one pretty close to the actual bottom. Okay? So if we go back now and clear the chart and just look at that and we say, okay, what was the result of that high probability bottom? Well, it was gold moving higher for the last 9 years, gaining $1,400 per ounce in value since I published that article, since I started publishing here on YouTube. Gold has more than doubled in value. That was a high probability bottom back here. Okay. Let's fast forward to the present. If this was a high probability bottom, again, if you're someone who wants to go to one of the thousands of YouTube channels out there who will only tell you that gold is going to continue moving higher, including times like this where it's going to move lower for no reason other than people are selling, then stop this video right now. and go to one of those other channels, because that is not what I do here. Back to the present. If this was a high probability bottom, what is this? I think at the very least, we can all say that if that was a high probability bottom, then the current period is not a high probability bottom. Can we agree upon that? This is not a high probability bottom. A market that's moved higher and is now going nearly vertical, not quite vertical, but it's starting to take on those characteristics. It is not a high probability bottom. Can we agree on that? If we can agree on that, let's go back to our any given market probabilities here and say if this is not a high probability bottom, if we can eliminate that possibility, then from the mathematical standpoint, it leaves us with two remaining possibilities that now take on a 50% probability. So, I am not saying that this is a top definitively yet. However, it is not a bottom with certainty. And because of that, because we only have two probabilities left, more caution is warranted now than back when I began publishing in 2015, and I thought from a highest probability that gold was forming a long-term bottom. More caution is warranted now. I did not say to sell all your gold or your gold miners, but I did say that more caution is warranted now than back at 2015. This is the simple math. So, I do not give away all of the answers for free. For our premium subscribers, we will be answering the question, are there signs of a gold top? Now that we've eliminated that possibility of the long-term bottom and we only have two possibilities left, we must start looking at these possibilities from a realistic perspective. Again, if you want one of those thousands of services out there that only will tell you one thing, no matter what the market is actually doing, absolutely go ahead and follow those other services. This is not one of those services. So in the premium member update that will be coming out on Thursday morning, we will be looking for signs of a top. We will be covering not only physical gold, but also physical silver, also the gold and silver mining sector, and the exact mining companies that we are investing in right here, right now. If you would like to discuss your situation, because in Precious Metals Intelligence Plus, I do not discuss your situation. I discuss my situation and the highest probability research that we are using. But if you would like to tailor this to your situation, if you own more gold than you are comfortable with, or more silver, or not enough, and you would like to discuss your situation, what are some exit strategies? What are some good timing possibilities, given the fact that this is either a continuation move or we're getting closer to a top? Know that you can reach me on the consultations tab of the website. You can book a consultation. I am 100% independent. We sit down just like we're talking right now, except we discuss your situation, not mine. I'm going to continue with our elite private placements service. If you're a higher net worth investor, you have to understand this. This is the key takeaway. In private placements, you can take your risk off the table after the 4-month hold period for these investments is over. Yet you can retain the warrants that are given to you for free in these private placements, and therefore you can retain risk-free upside after you take your initial risk off the table. There's no other way to do this that I'm aware of in the capital markets. But so if you think about it, if you're a higher net worth investor, the reason you should check out elite private placements is that you can make the investments in the gold and silver mining companies, and then after the 4-month hold period, take your risk capital off the table so that if gold does form a top, you're no longer exposed. But if gold continues moving higher, you get to participate on the upside with no risk on the table. Insane level of power that you get in these private placements. So, hope to have you join us in one or all three of these services. We know gold is not forming a long-term bottom right now. So it's either one of the two remaining options. It's either a continuation or it's getting close to a top.